Welcome to Coffee Break Real Estate. Today we're going to be talking about typical mistakes that people make and how to make the right decisions when you're looking to purchase your first property in 2026. Danny, what are we going to jump in with?
So I think a lot of this is based on our experiences. But wait, actually, first, what are you drinking?
You know what I'm drinking, baby. Mushroom coffee. And I know what
Mushroom
you're
coffee,
drinking. Black coffee.
black coffee, yep, in a white mug. So boring again today. But um, yeah, I think a lot of it from a high level is it's based on experiences that we've had, either as agents, loan officers, or my personal experiences buying and selling as well. Um, but I think it's a lot about reframing how buyers think, right? A lot of it is mindset and just changing how people think about the home buying process. Most people aren't clueless. A lot of people do know a lot of information and sometimes too much information, and they have issues piecing it together, especially when you're getting random advice from your uncle, your grandpa, TikTok, Instagram.
Yeah.
So a lot of people are very empowered, especially in today's age with information, but it's not getting pieced together correctly. So in certain situations, things get overcomplicated,
Hmm.
and people overcomplicate things. And buying a house isn't very complicated. Um, there's a lot to it for sure, and it's stressful, and there's a lot going on, but it's not complicated at the end of the day. But there are a lot of things that matter in how you approach it. So I think the biggest issue that I see is people starting too late. So they start the process too late, or they go to the wrong place. They go to, like I said, you only get info from your uncle, instead of piecing a lot of information together and figuring it out, or just talking to someone and getting a game plan going. I see it a lot. It's annoying, but we help people almost every day on stuff like this. So
Yeah, and it's like you said, people are starting too late. That causes a lot of issues with, scrambling and, getting the wrong advice or going to somebody quickly and just getting the information that you want to hear versus what you
right.
need to hear. And that's when you start in the wrong place. So if you're counting to 10, you're starting with nine and then eight, and then you have to jump back to one and then go
Yep.
two, four, six. So I mean, you got to start from one. It'll set the tone for you and put you like in a better spot, better position, whether it's emotionally, financially, just with stability as well. Um, and the
We also people
problem,
see people
yeah,
not starting at all, right? Like you see people
yeah,
like, getting all this information and then thinking they can't start.
yeah.
So yeah.
People think like, okay, everything has to be perfect for me to start, and then the time is never going to come, and you're going to just be missing out on a lot of, equity that you could build up, a lot of appreciation in the homes. People like, for example, they think, oh, I have to put 20% down. And it's like anytime I get a buyer in my consultation calls and they say, oh, we're going to put 20% down, it's always music to our ears, right? When we hear somebody putting a big down payment. But I
Yeah.
always stop and ask them, like, hey, what's the reason behind you putting 20% down? Because I
Right.
want to know if they think they have to, or because maybe they've done a little bit of research and say, okay, I don't want to pay PMI. I just want 20% down, get a good chunk of equity. And it's like, okay, these questions are going to be asked during the consultation call. Other things are like what we're seeing right now. Okay, rates were going down, and then everything with the conflict with Iran. Now rates are going up. So you keep hearing people say, oh, I was ready to jump back in, but rates went up. So now I'm waiting for rates again. And it's like, okay, these aren't like good starting points. These are people that are kind of hearing information, like you said, from the wrong person, reaching out to the wrong people, and they need to focus on their personal situation versus the market. And you have mentioned that on previous videos.
Yeah. It's doing, pulling the trigger when the time is right for you,
Mm-hmm.
and not timing the market. I mean, it goes both ways. Like if rates are high and houses are expensive, but you can buy and it makes sense for you to buy, you should. And then if, prices are really, really low and rates are really, really low, but you shouldn't be buying, then you shouldn't be buying. It doesn't matter, you
Mm-hmm.
know, um, on things like that. So, and we have countless, countless of stories, personal friends and family that have been waiting, and waiting and waiting and waiting. And, it's just, it sucks because like you know, I have friends that were in 2015 were saying, hey, these prices were, are too high. I don't want to buy right now. They're going to come
Mm-hmm.
down. It's just because we all saw the 2008 prices, but they were ready to buy. And guess what? They would have had a $1,500 mortgage if they did buy, still, but they just
Oh
had this
my
like
God.
perception in their mind that like, hey, I shouldn't be buying right now because prices are high. I was actually with my cousin yesterday, and his daughter, she's like 16 or 17 years old. And she said, I don't know how this came up, but she's like, Dad, I wish you bought a house in 2008. And he's like, yeah, me too. And then he even said, he's like, man, I'm in Modesto, California right now, and he's like pointing out areas here where he's like, man, he's like those houses were like 200 grand in 2008. He's like, then they went up to like 400 grand in 2013 or 14, and he's like, I thought that was crazy. Like this is so expensive, and then now they're like 800 grand. So it's like,
Oh my
you
God.
know, it's if you just keep waiting for the perfect moment, it's just I don't it could happen, but I've seen it enough, and it's been, dude, how long has it been? It's been almost 20 years since, the market crashed, and prices have still been going up. Like, they've softened a little bit here and there, but um we haven't seen any drastic downturns, and a lot of people could have
Yeah.
capitalized on this whole time, so
Like this is like because we see this every day, right? So it's frustrating for us to kind of have the keys, have the answers, but people don't want to ask the questions, right? So it's more frustrating for us is because it's like, hey, we go through this every day,
yeah.
and it's like when you go to the doctor and like you broke your toenail. You're thinking like, oh my God, I can't wear sandals again. I can't go to the pool. I can't go to the beach. Is this ever going to grow back? And then you go to the doctor's office and they're going to look at you and they're like, oh, okay, here's some antibiotics. Here's some jelly that you can take to help the growing process so you don't get any ingrowns. And they're just very neutral because they see this stuff every day. And it's like us, you know?
Hmm.
So going high level on this episode, okay, what does the process like look like? Okay, so tell me like what you believe that people should do to start.
To start, just have a conversation with either of us, or any real estate expert that you trust, really. Um,
Mm-hmm.
but it's just having a conversation. Like, I think a lot of people think that talking to us needs to be more formal. We need like an initial consult, and there's more commitment involved. But no, like I think just having a conversation as early as possible. Like the second you're even thinking about, like, man, I want to buy a house, even if it's 6 years from now, like let's have that conversation now, because like we talked about, you can get information from a lot of different places, but you want to get a
Mm-hmm.
game plan going, and using that information to understand what you want, when you want it, what comfort level you have. Like there's a lot of different things that we can ask you to kind of extract what your plan should be, right?
Mm-hmm.
And it's not even just about numbers. It's not always, hey, we don't start our conversations off with, hey, how much do you want to spend? It's more so like figuring out what works best for you, even emotionally, even like what are you, where do you want to live? What do you want out of your house? It's not really always about numbers. And um, this truly like saves people, because if you have this conversation early on, it really helps you formulate a game plan and not rush into things when the time does come. So I would say step one is have a conversation. non-committal, just hit us up, just text us. Hey, I'm thinking about this. Like, what should I do? You know, and even
Yeah, and
like
the
I said, if it's just
conversations are
not,
very simple.
it's very simple, and we love
Yeah.
having them too. Like,
Oh, it's
so
the
it's
best.
not even about getting a client or a deal. It's more so just having that conversation and helping people. Like I've helped countless people where it didn't turn into anything. It's not always about that. It's more so just figuring out what's best for
Hmm.
everybody.
Yeah, 100%. Yeah. Um, let me add probably let me add something to that. Let's talk about like financing stuff. Okay. The initial conversation is always great place to start. But financing, for example, people, one, they don't want to pull their credit. Okay. Sometimes I
Yeah.
understand that. Sometimes, I just have to let them know, hey, your score is going to be affected by like less than 10 points. It's not really a problem. It's not going to cause you from going from approved to denied. When I look at somebody's credit, okay, that's part of our strategy, right? I'm not looking at the credit and scrolling to see what the scores are, okay? Yeah, the scores are important, but it's the stuff behind the scores that's even more important because then I get to see what's your spending habits?
Hmm.
How's your financial responsibility? Are you aware that, you know, using this much of your credit card is going to hurt your credit score versus helping it? You know, putting yourself in like cash positioning scenarios where you're not taking your funds and just throwing it in one area where you don't need to, right? Like for example, I have these clients that they have some debt on credit cards and all, and they're looking to buy a place. Now they want to put minimum down, so like 3% down payment. When you're putting 3% down, okay, guidelines are a little bit more strict, right? Because you're putting the bare minimum. And they're focusing like whatever extra money comes in on their paychecks, they're taking that money and they're throwing it on their credit cards to pay off. And in this scenario, that might not be the best case or the best approach because, hey, you need money in your bank account. You need the
Yeah.
3% down. You need money for closing costs. And if you're a first time home buyer, putting 3% down, and let's say your credit score is not great, you have to show some money in reserves. You can't just deplete all the money in your account, right? Your mortgage payment is $2,000 a month. You have to show 6 months worth. So that's like $12,000 you got to keep in your account. So these are things that we go over in these conversations instead of people just blindly throwing their money in a certain direction, right? And
Yeah, because
another thing,
they're gonna throw that money into that credit card for, 12 months before they come talk to you, and then all of a sudden you're like, hey, you don't have enough cash, and they're like, well, we've
exactly,
been paying down this credit card. Be like, well, that didn't matter.
exactly, exactly.
So
Another thing that, that I like to do, and you and I talk about this, is we go over clients' max approval amount, but we also go over what's the amount that they can purchase to have that monthly payment goal, right? So that's something that's very important that we go over in the beginning and especially on our pre-approval call. Um, and then that leads to having a good pre-approval process, getting, not just the basic pre-qualification, as you say, but more of a strategic pre-approval to set you up as the buyer into the best position and allows Danny and I to work around that number and that scenario and that strategy so Danny knows how to input these offers on your behalf. So we always want to set these expectations before shopping. And
yeah,
yeah, I don't know if once you start shopping, Danny, that's your realm. Like what are some important things there?
yeah. I think this all ties back to that personal situation, right? Just like what you said right now, like, you have a max approval, but what's your personal situation to get you to that number? So, that's kind of how I approach the home search as well. It's just like, what are you looking for? Like, eh, price aside, like I was talking about earlier, like what are the non-negotiables? So like, what if I showed you a house and it had this thing every single time? What are you saying no to, right? What are like the nice to haves where it's like, hey, I want this, but if you show me a house that, doesn't have that, but it meets all these other, check boxes, I'm okay with that. And then, you know, um, other stuff that's not as important, like, like some people, like I'm helping my friend right now that's looking for a house, and he's like, I do not want any two-story houses around me. And, just because he's gonna have a pool in the backyard, he's gonna want to hang out, and he doesn't want people being able to see in his backyard. And it's
Oh
like
wow.
that's a non-negotiable. So when I, see a new house that pops up on the list for his search, I literally get on Google Maps and I go around and I'm like, are there any two-story houses that are, on the sides or behind them? So there's stuff like that. And honestly, every situation is different. So, and every person is different. Some people don't really care about that. Some people want two-story homes. Some people want single-story homes. So it's my job to figure out what do you want, and then what's a non-negotiable, and what is like, doesn't matter as much. So that's where I separate the numbers from the emotion, because it's like it's my job to kind of try to find something that fits your budget with what you want. Now sometimes you have the conversation of, hey, like, you want an 8,000 square foot house, but you can only spend 300 grand. Like that's not going to happen. So
Yeah, yeah.
uh, that does happen, but um, yeah. So a lot of it is that, like I said, separating the emotions from the numbers. Um, and then sometimes I have to, like, how do I put this? Like people have like this very strict rule on what they want, and then I have to kind of paint a picture of like, hey, this can be fixed. Kind of like you were talking about with the doctor. It's like, some
Hmm.
people are like, hey, I don't want this house because it doesn't have an extra bedroom. But then it's kind of my job to show them the house and say, hey, well, look, you could put up a wall here and have an extra bedroom. That's just a small example. But like stuff like that, where it's like people are dead set on something and don't want it. But it's like, I can kind of show you the value in, getting maybe a certain house for cheaper where you can add certain things that you want as well. So it's kind of, like I said before, it's your personal situation and tying what we're looking for to your personal situation.
Hmm.
Um, and also, just trying to not have you overpay. Like we talked about, even with like you said, there's people have a max approval. Some people have a max budget too. Like on the
Hmm.
deal we just did recently, I think our clients were willing to spend, I think 4K a month or something like that.
Yeah, that was
Um,
their target. Not even their
that was their
cap.
target.
That was their
Yeah,
expectation and their
right.
target.
They were approved for more, but that was what they wanted to spend. But even with that, it's like you and I together were able to get them down to, I think around 3 grand a month, just with negotiating and
Well,
getting.
because of your negotiations, you brought down their total savings on the home purchase by 45,000, and you got them another 10,000 for closing costs.
Yep.
So the only thing I did was I just saw that there was extra money in the closing costs after their for seller concessions after the closing cost was paid, and then we were able to use that extra money towards a buy down. So
Yep.
that dropped them down to about 3,000 a month. But everything else was
Yeah.
your talk, your negotiations, and you setting that example. But like, how was that conversation with them? Like, for example, when you're putting an offer, and then when you were doing the after the inspection report came out.
They were a little scared to ask for what we were asking for after the inspection. And I
Okay.
think that that's where having someone experienced is good, because I was like, hey, I knew the situation with, it being a trust company, and not going to get into detail, but I knew the situation and was like, hey, they're not going to like say completely no to this and tell you to move on. Like we're going to get some sort of negotiation. I like to anchor low. So they were a little scared, but I had to manage that a little bit and say, hey, it's fine. Like let's go in with this number, and we were able to get a lot back. So yeah,
Yeah, 100%. And the money
yeah,
conversation is always important, right? Like, for example, the stuff that I talk about is that down payment stuff, right? The down payment and how it ties into what your monthly payment is. So that's pretty much what I go over with the clients. I think that's super important. But besides that, I think the money conversation is more like your realm. So like tell me like what are certain things that's important when it comes to the actual money that they're spending?
It depends on their goals, and that helps us structure deals, right? So, um, we obviously ask for a lower price, but then like you were just talking about those seller concessions, if someone wants a lower monthly payment, then we can get heavier on the seller concessions to buy down their rate more. And some people don't want to have or come to the table with a lot of money, so that's
Hmm.
more of the seller concessions or a lower down payment. So there's a lot of different, I've talked about it before, levers. There's timelines, right? Like we had a client that was renting and had his lease that was 3 months out from when we were looking, so we did like a 60-day close to kind of save him money on not double paying rent for a while. So it just all depends. That's why having these conversations with us is key, because you know more of the financial, but I can kind of structure the offer where it fits what the financial goals that we're trying to
Exactly.
get to. So yeah,
Exactly.
yep,
100%. So with this, the strategy seems to be more important than the amount of money alone. Would you say that's right?
yeah. I mean, it's not really just about how much money you have. It's just how you use it, or just not how much money you make or how much money you have. It's really just about how you use it and how
Mm-hmm.
we could structure it being used or not used, right? Like you might be able to say hang on to some cash and still get into the house and hit your goals.
Yeah, 100%. I mean, I think with I think with the money aspect, having that conversation early, like we said, could avoid early stage mistakes, right? Like even before you're even under contract, right?
Big time. Yeah.
Like for example, like you don't want like in that example I gave, you don't want to throw your money in one direction where it's unnecessary, right? Like
Yep.
I get it, you want to pay off credit cards, for example, but hey, your first priority is to buy this home. We already budgeted what your monthly payment is going to be. You're okay with that and paying for your debt. So why throw away that money and just pay your debt and now you can't even buy the house? So that happened to us in one of the properties we were looking at. But I mean, what are some mistakes that you see like in the early stages? Talk to me about some crucial ones.
I mean, yeah, we kind of touched on it, but waiting too long to start learning about the process from
That's
someone trusted.
important. Not
Yeah.
starting the process, but learning it.
Yes. Yeah.
That's the whole point.
Yep. And that's why
Yeah.
I'm saying talk to us early on. We're not just here to start the process. We're here to educate you on learning about the process. And then, like we talked about, taking advice from random sources, which is okay. A lot of people have good advice, but you want to piece it together correctly. And then a lot of times like I talked about earlier, we're in a day and age where there's so much advice out there that you're gonna get both sides. You're gonna get someone saying you have to put 20% down, not have to, but you should, and you're gonna get someone telling you why not to. But it's our job to kind of empower you with both sides and let you make that
Hmm.
decision and figure out based on your situation what's best. One side might not even work. Like the some people might not even be able to put 20% down. So it's like, hey, why are you
Yeah.
even waiting for that? Like just, and we could show you how to get that house without doing it. So that's the main thing for me is just understanding things early, right? Like understanding the process, understanding the numbers, understanding your situation. People don't do that early enough.
Yeah. Unfortunately, people have had bad experiences with like working with people like myself, like MLOs, right? So
Yeah.
like for example, like I'm not bashing them. I worked for them, everything was great, but like if you go to NerdWallet or if you go to Rocket Mortgage's website and you just start using their calculator, you're going to start getting calls, right? And some people don't want that, right? And it's not a bad thing. I mean, that's why they're number one, number two lender in the country. But
Oh yeah,
for
I've gotten
example,
blown up every time I was doing a
yeah,
refinance or something. Like you just get hit up by a lot of different lenders.
yeah, 100%. So like I get it that because they think as soon as they start looking at something, they think they have to get pre-approved or try to
Yeah.
get pre-approved. And it's not. You're having a conversation first. It might not even make sense. And I've had multiple conversations where I tell people, hey, buying a house is not for you for
Mm-hmm.
this stage in your life. Right. So it's a conversation first before you have all that stress moving forward. And even let's say they get past that pre-approval stage, moving money around, making financial moves without talking to me. I don't want to sound like your parent or like I want to be, oh, I want to come off as your advisor, right? You have your financial advisor. I'm your debt advisor. I'm helping you on how to structure how to pay for
Mm.
certain debts so that way you can take on this responsibility of being a successful homeowner, right? And not just being somebody that owns a home.
Love that.
But
Debt advisor. It's a good one.
yeah,
It's
I
true.
mean, that's
Yeah.
what it is. I mean, and it's like this is something that a lot of people make mistakes on, but
Yep.
then there's people that are, smart, savvy that don't make these mistakes. Like, what do
Mm-hmm.
you see, for example, for these smart buyers or smart investors? Why are they so smart? Why are they so successful? Like, what are they doing differently?
Smart buyers and investors. They have the right mindset, really. That's what it comes down to. Um, they educate themselves early. They start the process early. They don't focus on perfection. I think that's a big one. They don't focus on like the perfect moment. Um, they understand everything numbers wise, and then when they're ready, they jump on an opportunity. Like, every buyer that we've dealt with recently together has really just jumped quick and at something that was like decent. And none of those situations were perfect, right? Like, like each house or situation was like, hey, this is not perfect. Like, our second to last closing, it was super far, like from where our client worked.
Uh-huh.
But he's like, hey, this is a really nice house. This is cheaper than, my max budget, and I'm gonna jump on this. So it's not about everything hitting perfectly. Now, like I said earlier, there's non-negotiables people have, and that's okay. But people do. I think every smart person that's buying right now is jumping quickly when they find something that they like.
Yeah. And
So
as you notice, last couple buyers that we had together, they moved not just quick, but they moved confidently, right? Because of the advice
yes,
and everything that we were able to provide them.
right.
So they
They were
moved with
very, very
confidence.
prepared. They weren't
Exactly.
they weren't moving quickly from like a reactive point of view. They weren't like, oh my God, I have to buy something right now. Let me just buy this. It was
Hmm.
they were prepared. They knew, they were empowered with a lot of data, and they were able to confidently move forward with something when they found it.
100%. 100%. And it's like just a couple things that I just want to say is you don't need to be quote unquote ready to start the process. You don't need the 20% down, the 800 credit score, the $200,000 income. The first step is literally no matter if you make $50,000 a year or $500,000 a year, you need clarity. Like they say, nothing's clearer than clarity. So if you're like you said earlier, if you're thinking about possibly being a homeowner or a home investor, call somebody that you trust and have a conversation with them. And if you're having a conversation with Danny or myself, it's a very casual conversation where we're learning about what you want to do, learning about you, learning about your short and long term goals, because your situation is different from Joe Schmo's situation. Your
Big
situation
time.
is different than the lottery winner on the Mega Millions, right? Everybody's situation is different. Now, Danny and I, we love doing what we do. And that's why we're both available for conversations. And if you're unsure of where to start, that's what we're here for. You can give us a call, you can text us, you can DM us just to get in touch. We could set up a time just to literally have a conversation. There's no commitments, no fees, no pressure. It's just the conversation. So you
Yep,
guys know where to
100%.
reach us.
We're here.
Anything else you want to add, Dan?
No, I think just like Adam said, start in the right place and reach out, reach out to us or any expert that you trust, and just get started at any point, even if it's 5 years before you're ready to buy. Get started.
Perfect. Well, we're going to end it here, folks. Like we said, 30 minutes or less on the podcast episodes now. Have a good one. We'll see you on the next episode.
See you guys.